Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk ECB, we're going to talk GDP, and we're going to talk about a pretty darn good 5-minute 920 crossover trade that we outlined yesterday during FOMC Live, and it came across the board at about 2:45 Eastern, and the trade turned into an absolute banger. We've also got two trade updates for you. We just missed an entry on the Euro CAD. As a matter of fact, depending on your broker, you might have actually got the trade. It was very, very close, but we're still on the board. We still like that trade, so we're going to update on the performance, and then also take a look at the news of the day. There was a lot of it. ECB's involved. GDP was sort of the big number here in the United States, and everybody's really wondering what's going on with policy. Are we going to get rate cuts? Aren't we going to get rate cuts? Is the pullback in stocks over? Right now, we are grinding higher. We are grinding higher, and there's absolutely no two ways to look at that. I'm just sort of looking at my news feed right now, just sort of trying to get a handle on what's been a very, very interesting day. This week has been a 10-rounder. This has been a 10-round heavyweight fight, for at least for my account. Started off great on Monday, had a nice day Monday, got hit Tuesday, got hit yesterday, came back with a monster day today. And so pretty good position going into Friday, but there is no two ways about it. This has been very tricky. We had a rollover that we were dealing with in gold. That's been tricky. We also had, the Fed meetings, all the central bankers. There's been a lot going on. So if you're turning a loss this week, don't feel too bad about it. This has been a real tough week to be trading with all the economic events and all the data. Next week is going to be infinitely better. But it's one of those deals where I broke one of my own rules yesterday. My basic rule is don't trade on Fed day. And if you do, don't use very much size. Well, I got in there and I traded and I went big. And eventually what turned was a pretty darn good positive day ended up leaving negative. But today it would have been better just to focus on today and just trade. The big trade today was clearly getting in on the breakout in gold. And we're going to go ahead and recap that for you as well. So I want to welcome everybody back. Tuku, good to see you. Bobby Bob, good to see you. Really an active week on the markets and everybody. I am confident that you're doing very well. And remember, if you need a place to trade, check out Switch if you're an international client. And then also if you're here in the States, check out our broker, our partner broker, Owanda. I got a great question from a trader earlier today. They said, Shane, how much money do I need? How much money do I need to, trade this professionally? And I'm going to break down a little bit what my weeks looked like this week. And I'm going to get into some of the swings, and I'm actually going to show you my own account performance tomorrow. I have to pull the spreadsheets, and I got to cut and paste and build a few slides. But I'm going to go ahead and do that tomorrow because I want you guys to understand how much money it really does take, and I want you also to see the swings. I have to tell you, this has been a tiring week. This has been one of the more challenging weeks that I've had in a long time, and it's been mostly trying to fight back. I feel like I'm fighting when a lot of times when we're trading and we're trading well, it's easy. The trades come our way, bing, bang, we're in, we're out, we feel good, we got a bunch of money, and we just move on with our day. Good stuff. Absolutely good stuff. So definitely some teachable moments there. I'm going to go ahead and do that tomorrow at the 8 a.m. We're going to go ahead and go early, maybe do some scalping as well. But I'm going to talk a little bit of psychology and what it takes to actually make it in this game. All right, week number 4, you can see today was just a huge news day. ECB interest rate decision and GDP. So we're going to go ahead and talk about that. We're going to run through the news. Remember, Tuesday, Wednesday, Thursday. Today was an all systems go day. Yesterday, I really am going to institute a new trading rule for myself. This many years into it, I understood that I needed to trade with limited leverage yesterday, and I sort of got outside of what I wanted to do. From now on, I'm not trading Fed days. I'm not going to trade them. There's too much going on. There's too much news, and I need to be putting those efforts into giving us the best coverage that we can possibly have here. So that's a new rule for me. No trading Fed days. Should be able to do it by now. Typically, it's just about a 60-40. It's not. There's no advantage there for me, and I've watched that over probably the last 20 or so Fed days, 20 or so Fed meetings. I looked at the numbers. It's like 60-40. It's not worth doing. You might as well just put your feet up and listen to what people have to say. But the next day, after Fed day, those have been some of the biggest. So today was no exception. It was just really great trading out there. All right, trade idea. We've got a trade update for you, trade follow-up. This was one that we put out earlier today. This is the brand new trade idea, so I do want to cover this. Great Britain pound USD. We're looking to sell a retracement zone right here on the monthly chart. I love my anchor points. Now, remember, tomorrow is the last trading day of January. It's been a fantastic January. What we're going to be looking to do is to really start game planning for February, and this is going to be the first one of my game plans, and I'm looking right at 38%, 126.09. I love that sell. So remember, if you want to check out that trade idea, all you have to do is go inside of the trading room at How to Trade and follow me. Click on my picture and just follow, and this should be beamed right out directly to your email inbox. So you're going to want to check that out as well. Also, if you have access to the analytics thread, should be in your left-hand column and look like a little, like I don't know what you'd say, like a little pulse, like a little heart monitor. Click on that, and it should bring up the analytics thread. But all these trade ideas are there, and it gives you our key levels and what we're expecting. This one was sort of a heartbreaker here. This Euro CAD pullback in view. I was watching relatively closely, earlier today, and I thought we had an opportunity to get it. But you can see right down there was our 38%. That was going to be our entry point. Absolutely loved this trade. It's located at 149.59, and we're going to shade that. We're going to go at 149.65-ish. We should have bought 74s. It would have been just fine, but hindsight's 20/20, and I'm nearly going blind. Take a look at this. I mean, this is it. Of course, I moved the Fibonacci's, but that is essentially what we were looking at right there. Spike high right there, spike low. Really a serious daily trend, or excuse me, it's a monthly chart, monthly levels, but the daily pullback today was just beautiful. You see right there, there's your monthly, bang, bang. Got a little 2-month range right there. What do you have on your daily? Daily was absolutely a fantastic trade, and we just didn't quite get it. Right there's your spike low, spike high, pullback. Man, that was a good one, and we just didn't get it. So, unfortunately, that one's still going to stand, though. 149.65 buys. We're still going to be looking at those. I don't really think we're going to get much in the way of price action down to our level, but we may. And if we do, we're going to have a really great chance to cash a ticket there and hit our profit target. Now, what I really wanted that one on today's ECB. I thought that where we sort of opened the day, you can see where we opened the day was right up there, right around 150.24. I absolutely love that. That was about 60, about 60 pips away from our entry point. And I was licking my chops thinking this is going to be a layup. This is going to be an absolute layup. Come to us. Come on, come on, come on. And we just missed our entry. So a couple of options there. You can move your entry down a few pips if you want to go right on the Fibonacci. I'm going to leave it up there at 65, and we're going to see how this one plays out. We haven't lost a trade we haven't lost a trade idea here in January, so it's been a pretty darn good month. We've got some big runners on WTI crude. You'll notice the NAs. The NAs are trades that are no longer available, and the reason why they're no longer available is because most of these are Fibonacci ideas or breakout ideas. For instance, in gold, you'll notice our gold trade is an NA. We were looking to sell beneath December's low. We knew we were going to break either above December's high or below its low. I chose below its low, and the breakout has come to the high, and we made new all-time highs. We're going to cover that right now. But so that trade is no longer valid. We don't play these trades after the market structure has been violated, and I've just gone through and sort of updated our spreadsheet here to show us exactly where we're at. So we've had 5 trades for the month. Not too bad. We should have had probably a couple of more, but that's okay. Well, believe me, you're better off taking it easy in January and easing into the trading year. But now it's time to trade. It's time to go, and we need to be in the market and we need to be active. So you can see we still have a whole bunch of trades on the board. We got that Aussie CAD low. I'm confident that's going to come into play at some point, so we're going to nail that one. And then we've got resistance in view for the Euro USD. I think there's a very good chance we could get that trade as early as next week. And then you've also got, let's see, what else do you got? US 100. We've still got a retracement level. I don't think we're going to get that one on a pullback buy. I think we're going to make all-time highs there anytime. And then this Euro CAD pullback, we just missed that one. And we also have a Great Britain Pound USD trade. So remember, the trades typically come in clusters and clumps. I think we're going to have an opportunity to execute a few of these in the coming days. And I'm excited. I think it's been a great month, and I'm excited for more. I want to see what February has for us, and I think it's going to be pretty good. Brian Barbie, good to see you. Hey, man, how you doing? I'm confident everybody's doing well out there. Tuku, Bobby, Bob, everybody. It's been a challenging week. And like I was just saying, Brian, if you lost money this week, don't feel bad. This has been a 12-round fist fight for me. I've been going back and forth, and tomorrow we're going to close strong and see if we can't walk away with a few bucks for all of our troubles. I got a pretty good feeling about it. I really do. In any case, this is a good look at our EuroCAD trade that just missed. This was the trade I wanted to highlight here. Now, this was one that we talked about yesterday on the FOMC Live. This was a 920 crossover. You can see this is all this Pine script coding. We sort of coded in our indicators to give us a real good look. And look at it right there. There was your big buy. Now, I fully understand that you've got indicators all over the place. And you can see exactly why yesterday was a real challenge, because the market didn't really have a direction. Like, you had a sell there sort of during the overnight, and then you had a buy there, and then a sell there, and then a sell there, sell there. We went to a 5-minute chart during the FOMC announcements, and the reason why we did that is because we knew the market was going to be active, and we knew we wanted to trade it. Gold is probably the most popular thing to trade in the world. I've been trading it all day long. Everybody seems to love gold. So we'll go ahead and trade gold. But what I'm saying is this. This was pretty good stuff. If you want to get involved with a 920 crossover or a 5813, we're going to be talking a lot more about that. You've got to know what time frames to use and when to trade it. Now, if you're going to do this, your success is going to depend on not getting wrapped up in flat markets. And you're going to need, you have two ways to do that. Number one, you can just be aware of your economic calendar and when you're going to have volatility and the markets are going to be moving. Or number two, you can dial in your time frames to get rid of the noise. Now, be forewarned. The smaller time frame that you go with this 920 or any crossover strategy, the better odds you have of getting chopped to pieces. So we went to a 5-minute chart during the most volatile time on the Forex calendar, and that's during a Fed announcements and then also with a J-Powell presser. What did we have here? 5 minutes sell right there, 11:50 my time, 1:50 p.m. Eastern. That was right before we got the announcements. So theoretically, you could have been in the market with a stop right there and got a nice little move here in gold to the short. But what we wanted was we wanted the market to base out and make a decision. Now you can see right there. Now this is just the crossover. This is without any confirmation or anything of the sort. There's our gold bar. All right, there's our gold bar. That's our bid. So where was our bid at? Our bid would have been, you have a couple options there. I say just bid it right on the close and be done with it instead of waiting for a pullback potentially to get better entry. We're going to make some videos on how you can improve your entry on this. But what I wanted to see is, okay, does the market follow through after our buy? 9 crosses over the 20. It's time to bid this thing. We bid it, and take a good look at what you've got. Could have got out up here. Probably the next crossover was right up there during the evening time here in the United States, 6:45 p.m. Eastern my time, about 8:45 p.m. Eastern, 6:45 my time. And take a look at where you would have got out at, 27.59ish. That's where your next crossover occurs. Where would you have bought at? 27.54ish. That's a $5 move on a 5-minute chart. That's fantastic work. Now, if you're serious about saying, well, I wanted to hold it longer than that, I believe that we had perfect trade location. You weren't lying. You weren't wrong. Look at what happened today. Look at what happened right there. 12:05, right ahead of that London Open. Just an explosion of price action. So you say, Shane, how could I have ever gotten in on that? Well, I mean, if you're trading this 24 hours a day, you could have went, well, right there, there's a sell, we lost that trade. There's a buy, we lost that trade. There's a sell, there's a buy. Well, could you have actually got that trade? You would have had a bunch of losers right in here. This is what you have to avoid if you're going to trade a 920. You've got to avoid it or you're going to lose a fortune. Bang, 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 out, out, out. Now, the only good thing is you're getting stopped out with real tight stop losses. And then, here's your bullish break. Okay, the market's opening up a little bit. Nice move there. Then we cross under. That would be your sell. You got a little bit of money there. But what did you really want? The idea was that you were going to be in a position to grab the big move, and there's the big move. Right there, there's your buy, there's your crossover at about 1 a.m., 1:10 a.m. Eastern time. And I mean, there's the run. There's the epic run up. Boom. And I mean, you're still long. And that's no joke. You probably could have exited there. And then here comes another big buying flurry. I bought right down in here using the gold futures contract, and it was a big trade for me. And I pulled it out. And that was fantastic. I was really happy that I held on to it because right here was ugly. This was ugly. But still, though the trend was up, it was strong. I said, nah, we got to wait this one out. And I was just fortunate I had enough money to ride out the storm. And then, we wound up in the promised land. But what I'm saying is this is pretty good stuff. Should you be long right now? You could be. There's nothing wrong with it. But that is what this strategy is designed to do. It's designed to get you just into these epic runs. And that it doesn't take very many runs like that to make your year. I mean, you're talking about buying in down there at 27.61, and then you're rallying up here to 27.93. So there's a lot there in gold. If you were long today, fantastic. I did a little counter trend scalping and also bought a retracement zone. Gold was great today. It really was. It was a trend day up. Now you're starting to see a little bit of weakness and we're coming back down. So the real question is what happened to gold? What made it the trend day that it really panned out to be? Well, first of all, we broke out of December's range, and we did that quite some time ago. But we also came across another big level, and that was your all-time high. And I've sort of harped on understanding what key numbers are and where they are on your charts. All-time highs are huge. You've got to understand where the all-time highs are. Remember, if you're trading near an all-time high, that means that if, in fact, you have something like a monthly top that is an all-time high, That is sort of resistance. Now, what would be the real key level we're looking at? Well, we went up and we tested 2790. I would say your next big round number, not 3,000, but 2,800. There's going to be there's going to be a few sellers in front of 2,800. The real question is, how high do we go? And it looks to me like we're going to go to 3,000. Even though we have some bearish market drivers that I believe could definitely put a dent in the gold market, there's still money flying into gold. And I think a lot of that has to do with anticipated rate cuts late this year. I think that's going to change. And also, we still have some hot wars going. And the idea was the new administration was going to put an end to these wars, and that may have been a little bit easier said than done. So right now we're starting to reevaluate where gold needs to be as far as an area of fair value. Now remember, when you're trading something that's trending, like a gold is over a macro trend over the last few years, understand that making all-time highs typically means what? It means that those areas are always around big round numbers. 2750 was huge. 2750 right in here. We did a lot of business over the last 90 days right around 2750. Now we've broke. What's the next stop? What's the next logical stop to the top side? It's 3,000. It really is 3,000. So I'm interested in really seeing where this market goes. Do I believe there's going to be sellers in here? I think you're going to see some guys dug in front of 2,800. It doesn't surprise me at all. So if I was in fact going to trade right now, I'd say, okay, what can I really do? There's your breakout. I mean, that is a bullish pennant on the daily. Run, compression, break. Real tight day on Fed day. Shouldn't surprise anybody. And then there's the breakout. So remember, markets run, they rotate, and then they break. That's the basis of price, the process of price discovery is all about sending out probes and trying to find an area where there's buyers and sellers. That's what it's all about. Right now, the buyers have it. The buyers have won. You've broken. What do we want to do? I have no desire to try to pick tops. I tried that earlier today. I was fortunate I was conservative with my profit target, or I would have got slaughtered being short gold. I'm not interested in that. What I'm interested with is getting into the proper position to really cash in and capitalize on the bullish price action. There's no denying we're in a bullish trend. Intraday trend's up as well. So if I'm looking to trade something like gold that is trending as hard as it is, I love my 4-hour chart with gold, especially spot gold. Futures are different. You're going to get more action in the futures market right during that London-New York overlap. That's what I would focus on there with the gold futures. But for spot gold or gold pairs, 4-hour chart's tough to beat. And the reason why it's tough to beat is it's a true 24-hour commodity. It means it trades all around the world, all around the clock. And that's critical that we understand that, because there's some things out there that only trade for a few hours a day that are really hot. Typically, U.S. equities are one of them. Right after that U.S. Open, really, through the London close, but then also again right ahead of the New York close. We got a video coming out tomorrow. It's called the ICT Kill Zone Strategy. It doesn't really show you exactly how to trade them, but it does show you what the kill zones are. One of the most common questions I get out of all of them. There's a couple, but one of them that keeps coming up and up over and over and over again. What's the best time to trade? When should I trade? The Kill Zone video can help you. It can show you exactly when the most action's in the market, as far as when the New York Open is, the New York Kill Zone, the London Kill Zone, the London Close Kill Zone, and then also the Asia Kill Zone. So check that video out tomorrow. I show you exactly how to use the kill zones or add them to your technicals and really start building a trading day and a strategy that's designed specifically for you. Now, if I'm looking at gold, I can't ignore the 24-hour action. Now, normally I would just love to trade the U.S. session. I would say, okay, I want U.S. session. I want to see exactly what's happening right now in New York. But with gold, it's different. You got a tremendous amount of action that comes out of Asia. London is pretty much the gold capital of the world, I believe. I'm sure it's probably Beijing or Shanghai now, but at one time, majority of the gold in the world moved through London. So you really have to be aware of the London Open when we're talking gold. So to me, that makes it a full 24-hour commodity. I'm looking at a 4-hour chart, 6 bars a day, and I think that gives you a pretty good look at your intraday price action and gives you some good stuff. So right there, you can see the move to the top side was 27.98. So those were the sellers that I was talking about on gold. They dug in right in front of 2,800, and they're riding the pullback down just a bit. So can we, in fact, get with price action? 27.70, 784, 38%. Not bad. I would be looking to buy a 38% pullback here. This is a strong break and a strong trend. And remember, our all-time highs, where were they? Right there. So just going to throw this down just to show you. There was your all-time high. We've broken above that by about $8. We need to see about getting with the program here and buying in at what could be a fairly lucrative level. Really could be. That's gold. I want to buy. I don't want to sell. I'm not interested. I'm not interested in really making a stiff bet on the gold market until I see 3,000. Once I see 3,000, then I could probably step up and take a short and maybe bet a little bit on it. But right now, don't get in the way of freight trains, guys. Don't get in the way of freight trains. Stay out of it. Wait for the market to come to us. Wait for the market to come to us. It will happen. The only question is when, and that's where they pay us to wait. They don't pay us to trade. If you find yourself wanting to trade every single minute of every single day, you've either got to do two things. Number one, stop trading altogether because it rarely works. Or number two, find a system and a strategy that's designed for those short time frames where you can really watch your profit and losses and then automate them so you can be as precise as possible. Build something for your own mentality, something that makes sense to you. It's definitely what you want to do there. All right. We're going to burn through the news, give you a quick news update. What we had during the overnight was fascinating. Sort of the global economic slowdown. Those talking points are gaining a little bit of traction right now. We saw GDP pull back in the Eurozone. That was big. I mean, that was something that really prompted today's rate cut from the ECB, the idea that they can stave off potentially going into a recession by racing those interest rates lower. I don't know that it works. I think it could be a little bit too late. Inflation's persistent around the world. We don't necessarily know how we're going to get prices back down to where they need to be. And the ECB is taking a shot at it. They're going to go ahead and cut interest rates. They think that everything's fine. There was a lot of rate decisions, though. You can see right there, South African Rand. They also cut interest rates in South Africa as well. That's the prime rate down to 11%. That's staggering. That's a staggering percent compared to what you see in the G10. But there's a reason for it, and that's to bring a little bit of value to the domestic currency. In any case, what you had from the ECB was the rate cuts. In the United States, remember, we didn't cut rates yesterday. The Bank of Canada did. The BOC cut, the EU cut, the ECB cut. The Fed holds firm. The Fed's not cutting rates until later this summer. That's going to lead to maybe a bullish dollar and put some downward pressure on risk assets here in the United States. Now, as far as what the rest of this means, continuing jobless claims, you're always looking at continuing jobless claims, but you don't really look at them as being a serious economic indicator. I would throw that away. I wouldn't even spend much time on it. Initial is what you want. Those are the folks that are going to the unemployment line for the first time, 207,000. Remember Jay Powell's comments from yesterday? They were hilarious. He says, well, unemployment's sort of a problem if you don't already have a job. And folks that are in lower income, folks with lower incomes feel the brunt more. Really? I mean, this gentleman has a PhD. Is it supposed to be the economist? And he's telling us things that are just ridiculous. Unemployment's only a problem if you don't already have a job. What the hell does that even mean? No kidding, Jay. In any case, 207,000, so we're down a little bit. The big number that we want to look at here is the GDP figures. They weren't good. Q4, quarter over quarter, Q4, 2.2% down, well beneath forecast at 2.5, up from the previous release. That's the price index. That suggests that prices are still rising even though they didn't rise as much as expected. That means that inflation's up and your GDP right here, 2.3%, well beneath 2.7 expected and well beneath 3.1. Now think about what's happened there. Your gross domestic product, your aggregate output, everything that everybody makes and sells, it goes into the market, right? It's supposed to grow over time, and it's still growing. And that's what the politicians will say. Well, we're still growing. I'd say, yeah, but you just cut interest rates by 0.5 point, and then you cut them again. This is after a couple of rate cuts. I think the problems are worse than we know about right now, and I think you're going to see the economic strife really start to surface here in the first half of 2025 here in the United States. That's my own opinion. We're going to see a lot of changes, though. There's a lot of changes, and we're going to have it every step of the way. If you have any questions at all about the fundamentals, be sure to send me a private message, and I'll do my best to explain. This is a trade idea. This was our trade of the week this week. 105.74-ish is a fantastic sell for the Euro USD. This is one of those that I think could be very, very good to us. We've just got to be patient. We've got to be patient on this one. I know I'm preaching patience, but I really like this trade. I think we're going to get a shot to trade it probably next week. I'm expecting a big move to open the month. I really am. I don't know if it's bullish or bearish, but I got a feeling I got a feeling that you're going to see some big-time action here in the next 2 weeks, and I can't wait to trade it. We're just going to get on the right side of action and see exactly what pans out. Now, as far as what we think or how we can attack maybe the Euro USD right now, we can see been an interesting month, maybe went down, sort of based out. I still believe that we could hit par value. I mean, I'm actually a firm believer that I believe we're going to hit par value here in the Euro US dollar. And the reason why, ECB's cutting rates, the Fed's holding rates firm, that typically is going to put some downward trajectory on this currency pair, okay? So if you do get a pullback up here, 105.75, of course we want to sell it. That's in our trade analysis. That was a trade of the week over on Forex Signals TV. We put that video out for you as well. But that's a pretty good area that I'm still looking to target, and I really love it through early February. I think that could be just a banger for us. But for right now, how would we sell it? Or excuse me, how would we look to trade it? Boy, that's difficult. Take a look at your 4-hour chart. I mean, that is just an absolute mess. That's a mess. Full disclosure, I mean, that's this right here. This right here is where I got chopped up yesterday. It was this rally right here because I was looking at my chart going, okay, I've got a 4-hour chart right here. We had a big move, big bearish move, big bearish 8 hours. And what happens? I'm looking to sell right in here. That doesn't really work. I look to sell up here. We do get a little bit of money, but it had to come after we got the Fed announcement. So, and then we just flatline there, and now you got a big break. I would stay away from this. This is bowling shoe ugly. You don't want to be a part of markets like this because you just wind up getting slaughtered. So if you are interested in trading the Euro USD right now, here's a couple of observations. Number one, you've got the 13-period EMA down there right around, right around 104 even. That's pretty good stuff. That's pretty good stuff, 104.02. So you could definitely be looking potentially to take a long from 104. I don't have a problem with that. Let's back off to a weekly here and see if we have an opportunity potentially to identify some levels that'll get us long. Now, remember, I'm not picking the bottom of the market. I'm not trying to do much of anything. All I want is to find some support zones that are going to give us 25 to 50 pips. We're not trying to pick bottoms. We're not picking tops with these fibbies. We're just looking to get involved. So right there, you've got 103.98. So we've got 103.98, which is a weekly 38%. We've got 104.02, which is a moving average, a daily moving average. That's a pretty good little buy down there. Even though it's already been had, it's already been hit, I wouldn't feel too bad about hitting that again. Realistically, 104, I love it. Big round number, moving average, and you've got a weekly Fibonacci retracement. That's fantastic. If, in fact, we do get a big break and a move, something like this, 62% could be fantastic as well. Personally, what I would love to see happen is I would love to see us trade up to our monthly sell. Maybe we take that short, get some confirmation, and try to ride that thing to par value. I can tell you that there's some investors out there that are thinking about doing just that. Hey, let's sell 106s and see if we get the big move down to par and maybe not a retirement trade, but definitely a vacation trade. That's for sure. All right, everybody, a couple more markets, I guess. If you guys have any markets you want me to look at, that's fantastic. I'm more than happy to do so. If not, we're just going to go ahead cover U.S. oil. I haven't covered U.S. oil in quite some time. This is interesting. This is interesting stuff to me. You can see that we are working on a significant Fibonacci retracement sequence here on this weekly chart. And we've done fairly well just trading the Fibonacci's. Let's go ahead and break this down for you and just show you what exactly I'm looking at. There's your double bottom right there. There's your top. Okay, what really are we looking to do? Well, we've already sort of got our long this week. That was 72.25. That played out pretty well. The back end of our golden zone, we went down to 72.05 and then bounced back in a big way by about $1. So that's a pretty darn good trade, but that one's the ancient history and it's over. So there's a couple of things I would be looking at here, specifically starting next week for WTI crude. We are expecting, I mean, that's when they swore Trump in right there. So from the time that we swore Trump in at 77, you were trading 77.32, and you're now at 73.08. So that's about a $4 change. Do I want to be long or short this market? I want to be short. I want to be short. The executive orders are in. There's going to be a lot of oil drilling. There's going to be pipelines opened up. There's going to be a lot of energy coming onto the market. You've also got some really tense negotiations with Saudi Arabia about where exactly the United States would like to see their oil production levels. I think you're going to see a big sell-off. I really do. If you start seeing peace deals get signed, you're going to see a sell-off. Now, that runs contradictory to seasonality. Typically, we see bidders step up into the equation here later in February. I don't know that that's going to happen. So I would wait, be very, very careful with what you do with WTI crude. Personally, this weekly chart, I would be looking to play a breakout underneath last week's low at 72.05. That's a sell under there. In my book, I think you play that sell down to about 69.98 or 70, and then that's just the absolute beautiful buy. That's the buy that you really want, at least for the next 4 weeks or so, 3.5 or 4 weeks. A lot going on. I don't really want to be long. I don't want to be holding longs here, WTI, but we can definitely scalp against the trend, and that can set us up for some success potentially as we go into the spring months. All right, everybody, I want to thank you for joining me today. I know yesterday was rough. It was a rocky road. I got to tell you, I must have aged 20 years in about the last, well, not 20 years, but I definitely have aged at least 2 or 3 years in the last 36 hours. This has been a knockdown, drag-out fight, rough and tumble. We're going to talk a little bit about the psychology of dealing with these big swings. I know that it's hard. I've been doing this for a long time. It's hard for me to get my head around, oh, you're way up one day and then you're not doing great, and then you flatline, and then you go down a little bit, and then you go way up, and then you go flatline, and then you're down a little bit. I don't like that. I like 45 degrees. I like to show up, get my tick target, and then I like to get out. That's what I like to do. That's all there is to it. So we'll talk a little bit about that tomorrow. All right, let me see. I got one request. All right, let's go ahead and do Bitcoin, and then I'm going to go ahead and sign off here. So Bitcoin USD, clearly we are bullish. No question about that. We saw a little bit of a sell-off earlier this week with all the tumult and the turbulence. That's no surprise. You'd have loved to bought that 62%, though, right down there last 2 weeks range. I mean, big picture, guys, we want to buy. We want to buy. I mean, this is a vintage. I'm not necessarily an expert in Elliott Wave, but I do know the basics of Elliott Wave. This right here, this would be your sort of your compression area down in here. This would be your break. That's your 1. That's your 2. That's your 3. Remember, 1s and 3s and 5s move, 2s and 4s are pullbacks. So if we think about it that way, we go, okay, what do you have here? You've got almost a perfect Elliott Wave. You do. There's your 1. There's your 2. You're forming a 3. And we haven't pulled back yet to form a 4 or a 5. Bullish, bullish, bullish is the way to go. So for me, I'm thinking, okay, how can I design really an entry point that isn't just good but great? This is a weekly chart. We already sort of showed you the weekly pullback there. Daily, I don't necessarily know that I would go to a daily to play pullbacks. You'll see right here, if you're looking at a daily, you had a pretty good liquidity sweep back there on the 20th of January. What happened on the 20th of January? It was Trump's inauguration. So this liquidity sweep was when everybody was in the markets going crazy. And what did you have? You had a sell-off. Then you had sort of an inverted hammer. Or excuse me, that's just a straight hammer. That's not an inverted hammer. Straight hammer, and then the bid. So I know that nobody's really a fan of these anchor points, but take a look at our performance from January. They work. When you get your price, you do very well. The challenge is just getting your price. Spike low, spike high. 86.8. It's a beautiful buy. Are we going to get it? Probably not, but we may. So we're going to be watching this for the next couple of months. That's going to be on my board. If I'm trading Bitcoin right now, I see it as a pure 24-hour product as well. I sort of view it a lot like gold. A lot of people are making that comparison these days, but you have to be aware that this never closes. This trades all day, every day, and all night. That's how I would approach Bitcoin. 104.5s, you want to buy that, and if not, you just wait for a deeper retracement in 103s. You just got to stop yourself out if, in fact, you get a pullback beneath 101. Personally, I probably would be basing my idea. If you got a pullback to 103s and you're bidding 103s or 104.5s, my stop out point would be beneath 100,000. That's where I would want to see it. That I know that ignores market structure, but on these short time frames, I mean, you can see that these price points have all been traded. So all we're doing is just betting that there's more buyers than sellers out there, than that sentiment's positive. That can work. If you're playing on the cash market, you can do it. You can hold these positions. But if you're trading derivatives, it's really hard. It's hard because you're leveraged. Believe me, I took a hell of a draw this morning, and I'm happy that the market went back my way. But I also felt awfully exposed. I don't like doing that, but sometimes you have to do it. I advise staying out of those positions as much as you can, because it just makes you tired. It's hard. Build your trades with structure. When they don't work, they don't work. Cut them off. Go on to the next trade. This would be one where I'm just looking for an entry point to get long. So if that's going to be the case, 103 is better than 104.5, and also maybe just waiting for just a naked pullback without any Fibonacci's. You don't need to use indicators. Look at that. People love smart money concepts. That area right there, you test that order block. It's no coincidence that happened right beneath 100,000. 100,000 is dictating everything. Everybody's got an opinion on Bitcoin from 100. Do we buy it? Do we sell it? Do we buy it? Do we sell it? Well, as long as there's an opinion, two-way action is going to give us an opportunity to play a break. And there it is. The last time we pulled down, right around the 26th of January, you're already up 7%, 6.5%, 5% if you bought hundreds. That's a trading strategy that a lot of the world's using, and there's nothing wrong with it. It'll work till it doesn't. And when it doesn't, you just get out and you come back again a little bit later once something else is set up. So I hope that helps a little bit on Bitcoin. Let's go right here. Let's take a look at one thing we will look at right here. I want to see Bitcoin. Now, a lot of times the time frames we got to be very careful with here. Let's go to that 4-hour chart. Yeah, I mean, there's your bid. So you'd be on a buy right now with the 920 crossover. That bid would have been from 103.73, so you'd be up a couple thousand. Fascinating stuff. There was a pretty good sweep lower, and then there's your high. So, I don't know. I'd probably wait for a pullback before I got in, but definitely still bullish, guys. No question about it. All right, guys. I went a little bit long, but that's a wrap. I'm going to go ahead and sign off for now. We'll be back tomorrow. Remember, the time is going to be a little bit early. We're going to be going at 8 a.m. my time, 10 a.m. Eastern. I want to get in. I want to get the live stream done so we can start focusing on the weekend and what's up next week. Be sure to check out our trading schedule here. In the trading room. I'll have next week's live stream schedule up. Probably momentarily here in a few hours. And then also we've got a YouTube video coming out tomorrow on how to trade calm on YouTube. And it's going to be on the ICT kill zone strategy. I'll be sure to throw the links out there everywhere. But you guys check it out if you want. If you're interested in trying to time your trades, it's a pretty darn good little strategy. All right, everybody, I'm going to go ahead and sign off. You bet, Bobby Bob. You're welcome. You guys have a fantastic trading session. Trade it well. We'll talk soon. See you.